It's been a while since we've really spoken about fleet. So I thought today I'd just make a few comments to bring you up to date in terms of what's going on there. We announced a little while ago the Shell Framework Agreement, which is now well and truly underway. We've made at least three sales under that framework agreement with organisations associated with Shell in Asia and Africa. So they're signing up for Guardian, and we fully expect to be able to announce those parties when we get approval to do so. But the good news is that relationship with a very safety-orientated global customer is moving forward exactly as we'd hoped. So that's good news. The business itself is we're really pleased. The unit sales rate remains very strong, despite all of the things that are going on in the market today. So we're very, very pleased with that. And in fact, the team that we've put in place in Europe over the past few months is doing a very, very good job. They're starting to engage not just with the customers that we would typically engage with, well-established, fleet management businesses, but they're also engaging at the OEM level with bus and truck manufacturers. I think most of our investors are aware that Euro NCAP is not just focused on passenger vehicles. We tend to talk about that a lot because it's a major part of our business, but it is in fact touching all vehicles sold in Europe. So we're now starting to see a substantial increase in the level of inquiry for what we call after manufacture fitment. So not fitting the equipment, in a truck that's already in operation in fleet, but fitting it just after the truck has been manufactured and before it's sold. So this, we think, is a very exciting opportunity. It's again driven by the regulations, and we expect to see that part of our business increase over the next year or two as these regulations move closer and closer for the manufacturers and the users of these trucks. So overall, that's a new area for us. It's quite exciting, but it just goes to show that the regulations in Europe are very much supportive of our technology and represent a very important business opportunity for us. So we're quite pleased with that. Generally speaking, our fleet business is doing very, very well. We're making a range of sales across all of our channels, including the increased emphasis that we now have on direct corporate level customers, typically those that have a substantial global footprint. We're well progressed in terms of our roadmap, and that is to bring automotive quality features into the aftermarket product, and of course we're well progressed on the development of our next generation product, which we think will open the market in terms of volume quite dramatically, enabling us to move from essentially heavy vehicles into light commercial. So all of those plans are continuing to progress well, and we're quite happy with the outcomes that we're seeing so far. So we're on track there. Last time we spoke, we talked quite a bit about automotive, and we've made two announcements since then, a tier one customer in Europe and another out of the US. Now this brings our booked business to just short of $400 million, $395 million via 10 OEMs and 14 programs. We expect this momentum in winning RFQs to continue throughout the course of this next financial year. So we're really bullish on the direction of automotive and the value contribution that makes to our business certainly over the medium term. I think one important thing I'd like to draw out here, and I get questions on this all the time, and as we announce a win, they tend to be a little bit opaque in terms of the details because we have to align with what we're allowed to say. But there are just there's a little bit of terminology I'd like to just expand on. We talk about lifetime value, and I get a lot of questions about what that means. I mean, is it a decade? Is it 20 years? Well, no, it isn't. It's typically the life of a model, which is somewhere between 5 and 7 years. Let's call it an average of 6. So when we talk about lifetime value, we're really talking, on average, about 6 years. So that's important. The other thing we say typically is initial award, and this references the quantum of the deal that we sign. And what we have experienced in all of the programs that have now hit start of production is that those production volumes tend to be significantly higher than those initial awards. And this is an important factor. It's very difficult for us to, in an announcement or when we win a piece of business, to guesstimate what the full potential is for us. But what I can say is that the terminology that we use, initial award in particular, our experience in all of the production vehicles that have now launched is that those volumes are rolling in higher than initially anticipated. Now, in the other parts of our business, aviation, we've talked about that recently. We've had some wins, and that business continues to move forward. I think, as I've said many times, we are looking to operate that business differently, and as it stands today with the awards that we've won, we've got the underlying momentum, but it is a smaller part of our business, but I just think it's important that people understand that it is moving forward. So we're reasonably pleased with that. I guess finally, we had an investor conference in the US through Stifel, our broker. It was well attended by US investors. The feedback on the Seeing Machines business was very positive, so I'm quite pleased with that. And what that has done, and what prior efforts to communicate with US investors has done, is it's really opened the door to more interest. And despite current market conditions, I and we at Seeing Machines continue to receive requests for meetings to explain our story and our business proposition to new US investors. On that basis, a little later on in the year, we're going to hold a Capital Markets Day in the US, and this will be a great opportunity for us, I think, to not just get in front of new investors, but also to showcase the depth of talent that we have, the capability that is inherent in our business, and of course expose our leading edge technology in real life to investors that may not have seen it before. So that's a plan for later this calendar year. But all in all, we're quite pleased with progress. As I say, rate of sale in fleet is strong. We're getting traction in new parts of the market. Our win rate remains strong in automotive, and we continue to reiterate a much higher market share objective, circa 50%, which is quite an uplift on our sort of long-held view of roughly a third. So all of the indices that we look at, we feel confident in, and of course our start of production vehicles that we are in now. These are vehicles that have hit the road. The numbers that we're seeing are materially higher than those that we first announced. So when the rubber hits the road, so to speak, that's a very important number, and it's I think important that we communicate that more regularly, and we will be doing that over the course of this year, and the expectation is that we'll present a quarterly update to the market on those key KPIs specifically. So look out for that. Thank you.